Won't be too long today. We'll say last week I didn't really take any executions, and I didn't really focus on EURUSD, and something about AUDUSD that I just wasn't really liking was just the fact that we were unable to create a significant low. So we are technically still bearish, but this causes a bit of confusion in terms of us wanting to continue lower in terms of the continuation. So it's just been a bit messy in my opinion. So whenever stuff like this really happens, I don't really like to execute. I like to see things play out, just because we also have already been very overextended, right? We've been bearish for so long that I don't want to get caught up, trying to continue this bearish bias without any proper justification. So this kind of, influenced my opinion in terms of a direction. So it didn't really, make it very appealing for me to want to take many trades. As for EURUSD, the bias was very clear. I just never really found any executions while I was in the charts. So I kind of just, stayed away from EURUSD, stuck to AUDUSD, and I think it was like 2 break evens and a win. So nothing too much, nothing too crazy. In terms of the executions, like I said before, we are technically bearish, so I'm still looking for the bearish continuation. So my first execution was here, and even though technically we are looking at potentially corrective structure, the structure overall is still bearish, meaning that's kind of why I'm still leaning towards the bearish side, at least from the short-term perspective. So let me start zooming in here. So my first execution, it was based on the initial model being a liquidity grab continuation. So yes, from a minor major intraday, this is technically corrective structure, but from an internal stance, this is, in my opinion, just a liquidity grab continuation. So just based on structure alone, we should still continue unless we are to break here, right? And so that's kind of how I built my bias here. And my first execution during session was based on, right, these 2 red lines, right, red line POI, then leading to a internal continuation BOS. That signifies to me that we have a liquidity grab continuation, and that is the model that I took here. It was based on, I believe it was the entire POI. It might have not been M5. Yep, there we go. Here, so, excuse me, the execution, right, I'm allowing my stop loss to be right above the previous high, but if you want to be very conservative, then you could use the entire POI. But to me, that is the internal invalidation. So realistically, if we're going to continue now, and if my trade is going to be correct, it's going to go from here. And obviously my first target will be here, and my first break even is right after the initial low is broken. So the initial low is broken, that moves my stop loss to break even, and then that stops me there. So I kind of wanted to switch my bias here, just because I kind of wanted to read this as order flow disruption here. So not order flow disruption, sorry, weak order flow. So I kind of took an opposing position to see if I can get the opposing direction, just because it doesn't seem like, based on the reaction after we took the previous low, that we're going to continue any lower. So I changed my bias completely, right? And then I took a buy from here, right? Stop loss right below the low, and I'm looking for relative equal highs up here. And that's where my bias changed there. And I was able to move my stop loss to break even right after this. So as soon as I saw this, and then my break even was immediately hit, I had pretty much no way of closing within some type of profit. So at that point, I'm just like, you know what, the bearish position didn't really give me it gave me a reaction, but it gave me a follow through, and then the opposing one gave me another reaction. It didn't give me a follow through. So this just looks super messy. And right, after the session, right, the reflection was, hey, I shouldn't be trying to force a trade within, right, an equilibrium slash premium slash discount, right? I should be waiting for this to come up, right, to maybe come up into some sort of discount, maybe look for some sort of, right, some sort of candle up here. Even if that wasn't the case this time, that should have been what I was looking for. It should have been to where I should only take a trade if we were to reach this inefficiency point during the session. So I kind of just said, you know what, it's okay. Took 2 break evens. I'm done for the day. I'm gonna just, you know, refocus. But the bias was still correct. And as you can see, even though we didn't catch a move and probably were not going to be able to catch the move, the bias was correct. So at least I got that out of the session. So that, I kind of just didn't do anything after that. Came back the next day, and that's when I believe we had a news move, right, causing this big candle downwards. So I believe this, right, tapped here. Right, so we have potentially a sign of potential unwillingness to come, but the unwillingness is not confirmed when we are here. So, right, so when I'm interpreting this, I see an H1 POI, right? I see the continuation BOS here, right? So that solidifies high into low technically, and then we come back for the continuation BOS, but this is an internal reversal BOS, which realistically now is high into low into retracement, which this should realistically, you know, continue lower if that is where structure is meant to go. So let me clear that up for you guys. High into low into this retracement here, and if we zoom in even more from there, right, if we are to zoom in more from here, then we see now the potential unwillingness coming here, and then that creating an internal scalp an internal scalp range into the upside. But to me, this is still not the safest buy here. The safest buy comes after we break the structure, because now we have a solidified point of unwillingness, giving us potential reasoning as to why we should continue higher and no longer continue lower. So, right, like we said before, high into low into retracement. This causes an internal ruckus here, and we now have an internal range, but we are still technically bearish because you could realistically say that, hey, we have a POI here and we should continue lower. So I waited then for the next jump and the next break, right, to be convincing. As you can see, high momentum, and this gave me enough of a reasoning for us to want to continue lower. So as far as me trying to correlate some type of model here, I wouldn't say this is any model except maybe potentially a structural disruption, only from having the reaction confirm and then going up, and then this would have been a high risk entry. But the opposing side to that is that this would be maybe technically an order flow continuation, just because maybe we might have a model here, and then I'm looking for the continuation after that. So right, so the initial point of interest is here, and my position was based on the M10 candle. Yep, M10 candle here. Right, so SL at the low, of course. Right, and this, I'm really only aiming for the immediate high here, just because I know that from the external picture, we are still overall bearish from a major/swing. So if I'm going to take a buy position, I'd rather be safe and just let this play out and give me the immediate target and then, you know, sit on my hands and wait. So this is a simple 3% in about what, 2 hours, an hour and a half. So not too bad, but I wouldn't say not too good either. This is just what I was able to get over these past 2 weeks. But outside of that, right, I could have probably held this, right? Would have been a 5% in about a day, maybe. About 10 hours. So in my opinion, I'd rather take 3% in 2 hours than 5% in 11, you know? So that's just kind of how I'm looking at this here. But yeah, other than that, there wasn't really too much I've been trading. We're kind of in a messy position, like I said before, right? Where we've already been bearish for so long. I don't know if we're gonna maybe get some sort of pop into the upside before we continue lower, because you guys know that I believe we even said this like a couple months ago, is like we are 100% bullish on DXY, especially after the structural disruption. And now that we've broken structure, realistically, we are not going to be bearish anytime soon. And like once again here, another structural disruption into the upside. So I'm kind of convinced that this is going to keep going higher. And if you're to look into the bigger picture, then you guys know, like we've covered this before, why this could still continue higher for the longer term. And this would be for the next year or so. But yeah, this is kind of just a tricky situation. Like I said, even though our overall bias is bullish on DXY, I don't want to get too caught up just being stuck to that bias in a discount for AU and EU. So I guess we'll just have to wait and see if we can get some sort of models, you know, occur during that time. So yeah, other than that, not too much from my end. Been a bit of a slow week, 2 weeks. So do you guys have any questions, anything you guys want to go over, etc.? Yep, that was only 12 minutes, so I have time, guys. I'm not really in a rush here, so if you guys want to cover anything, let me know. Can you analyze EU? I don't know what you mean by analyze, bro. I just said we've been bullish on DXY, so that should fit the picture. You could analyze it and send it to me, and then we could go over that. I would much rather prefer that. Could you show you can't structural legs based on solidified points again? Is there an eventually the course? It really just depends on the scenario. For example, right, like I said before, don't try to stick time frames onto structural levels. It doesn't, like for me, that doesn't make sense. Just because different time frames give different views, but just because they give different views doesn't mean you're getting different information. So simple for EU, right? I would consider, right, just based on where we are right now, right? This is my minor intraday leg, right? This is my intraday, my intra-session leg, and anything in between that is, right, my scalp. Okay, so there's not really much more to that, because then if you begin to zoom out, then right, this leg and then this leg and then this leg, that means that this overall, like from here, is now my major. All right, so my major, my minor, and my scalp would be the internals here. There's not really much more to go over than that. Like the point isn't to find, like, let's say, like I said, like with the time frames, is not to find a particular rule that, hey, this leg is 100% going to be a scalp, a minor, or a major. It's just to acknowledge that, hey, these structural points, these structural ranges, they are internal to this, meaning that that external is, you know, it's carrying much more security than the internal. That's all that really, that's all that really, like, all that really means. Yep, and then like, for example, if you even zoom in even more than that, right, like obviously, like we said, this is scalps in here. If these are scalps here, then that means that these are micros. So you see how the micros have much less security than the scalp, right? They're much more, just you see much more whiplash, you see much more liquidity being taken, just because like the security is much lower the deeper you go. So if you focus on the scalp, the minor, the major, then you have a bit more security, but you also have the opportunity to get more frequency of trades. Whereas if you only trade micros, like if you're like how we showed Tomas's stuff last week, right? If you're trading micros like that, you will find setups all the time. But if you're able to correlate that then to your minor, major, and scalp, then you can, you know, potentially get a high risk to reward trade. That's how that works. So are you willing to sacrifice the security of anything that you do, whether that's the way that you look at POIs, the way that you look at structure? Are you willing to sacrifice that for more frequency of trades and potentially higher RR? But at the same time, you might catch these dumb losses that you probably might not be able to explain, and that could ruin your psychology. So if you focus more on the scalp, the minor, the major, then if that is how you've built your models based on that, then usually if you get a loss, you can usually know, you could tell why for the most part. Yeah, so that's all really there is to it with structural legs. It's just understanding that this is internal of this, so that means that the internal has much less security than the external. That's all it is. Yeah, and that's a good approach. It just varies because you won't always have it show its hand. Right, that's why you don't see me taking trades every week, just because if something isn't shown that I like, or something isn't shown that I actually trade, then I'm not going to do anything, you know? So you got to find the right balance, the right mix of what types of trades are you wanting to take, and then are your models going to benefit you in those situations? Because realistically, some traders they might only want to trade once a month. Some people want to trade every day. I disagree with trading every day. I think it's not the best way to look at this. So I found a good mix with 2 to 3 times a week max. So some weeks I may not take any, some weeks I do, some weeks I don't. So it's just I want to say balance, but it's just more so it's a self-control. That's kind of more so how I interpret that. Cool. Hope that made sense, bro. Cool. All right, any more questions, guys? There's 18 of you on here. I know somebody has some type of concern. Yeah, guys, we're at minute 23, so I'm gonna give you guys 7 more minutes if anybody has any questions. If not, we can just go ahead and wrap it up. What do you mean by solidified structure? There are solidified points, and there are structural ranges. I don't know what I don't know what you mean by solidified structure. And also, whenever you guys are asking these questions, like, I'm a visuals guy, right? I don't know about you guys, I'm a visuals guy. So if you guys can show me an example of what you mean. Oh, okay. If you guys can show me an example, that would be perfect. Yes, the preliminary structure is a solidified point because they had a CBOS. If there's a CBOS, then that means that there is a solidified point left behind.
Bro, so can I share my screen? I want to show something on EU.
Yeah. Hold, give me 1 second, bro. Let me. All right, there you go. Good work.
So this is my position EU. I was
Give me 1
checking.
second.
Okay. So I was checking H4 on EU, and so here is my solidified structure. So here is my H2 POI, H1 POI, and I'm considering something around here too. But unfortunately, the price did not reach this point before it went down. So I want you to analyze this range.
I don't understand what the question is.
All right. My question is, looking at the structure points. So I have my POI here on H2 inefficiency. I have H1 here, which is this special candle. But the price did not reach equilibrium before it went down.
Okay, this
Do
is,
you
in my
understand that?
opinion, bro. This is not. How do you trade? What is your model?
What do you say?
What is your model? How do you trade? Because we don't just point at a POI, wait for it, take the position. That's not how we trade. That's not. That's just. I wouldn't say that's incorrect, but that's just not how we operate here. Because this is very clearly a CBOS, correct? Meaning that this is the pullback of whatever leg is over here. So meaning that this impulse begins here and that begins the no impulse. So you cannot even anticipate this or this if we haven't even solidified the entire range yet.
Okay, understood.
Because for example, there is a liquidity gap continuation here, right? And there's very clear POIs here, right? Here, maybe there is no position, right? But maybe here, then there is a continuation BOS. This could potentially mean the 50% inefficiency here, and that creates a sell that has a reaction. If that reaction is to break, then that is now order flow disruption, right? You trade based on models, bro. You don't trade based on pointing at a POI and then you just want it, and then it should just continue. It's not that simple.
All right, understood.
But yeah, if you don't have a model, then you won't get anywhere, bro. And I don't mean that in a bad way, but if you don't have a model that you're using or you're playing by, or multiple models that you're using or playing by, then the mistakes will come and you probably won't be able to explain them. So I don't, like, for one, I don't understand your question. Like, I don't know, like, you're asking me, hey, why did price not come to these POIs? Like, what do you realistically expect me to say there? Like, is there some magic reason as to why this didn't reach the POI? No, it's just I don't trade like that. I don't understand that. Like, I don't wait for POIs to come. I play based on the internal reactions. I play based on solidified points and structure.
Right. Understood.
Mm-hmm.
Thank you.
Cool. Let me see. Give me 1 second. Let me open this up. Okay, what am I seeing? See. Okay, what am I seeing here, bro? Can you unmute yourself? I think that would be best. If you could like annotate too, that would be cool. The last solidified low, there's a couple of them. Depends which structural level you're talking. What? Hello?
Yeah, I can hear you. Can you hear me?
Yeah, I can hear you.
Okay, I was quite confused concerning this the US 30 in the sense from our higher time we've been bullish. So the first CBOS shows me that the first CBOS, yeah, that CBOS there shows that we solidified the low. That's the end of the retracement. The pullback.
Which one are you talking about, bro?
The arrow you made on the CBOS by the left, yeah. So we had POS. Then now I was anticipating price to take out the last high for me to confirm bullish so that I will continue buying because I bought from, yeah. But now from the reaction, I'm seeing that price took liquidity, create, and from that POI at the extreme, then a bearish continuation. Somehow, I was just thinking of, I don't really know where price will go from here. So I was just waiting if it will convert bearish by taking that last solidified low.
Okay.
I just want to get clear. Yeah. If taking the solidified low would convert it back to bullish, or because since the range is still bearish, if it takes the last solidified low, will it convert it back to bearish? Because the range I'm playing off is still bullish. That's
okay.
Confused. Yeah.
So where did you buy, and did you ever sell, or did you only buy?
No, I just bought from.
Okay, where did you buy? I'm assuming here's one.
Yes, but it failed. Then that last part, yeah.
So it was only one buy.
Yes.
Okay. So obviously we know that the direction is bullish, right? But we also know that there is a break of structure here, meaning that there is an internal bearish leg here, meaning that this should realistically continue lower if we were to continue bearish, I'm sorry. But because we had the whiplash right here, this is not structural disruption, this is order flow disruption. So there's order flow disruption, right? But here, what I don't like is that potentially there is another POI here, because the range is not invalidated until this is taken out, right? That means that you're still technically bearish internally until this is taken out. So because we have order flows here, right, that means that this could still realistically continue lower. Hence why I believe this reaction is what caused this break of structure to occur, right?
Yes.
So that completely invalidates my reasoning as to why I would buy here, right? It doesn't make sense to buy here because internally we are bearish and there is a POI rejection coming here. So not necessarily saying that the POI reaction should completely invalidate your bias, but it's more so, hey, what does this POI reaction mean? And realistically, we know that if a POI is correct, it will usually give a reaction. So just based on this alone, in order for this to give us a confirmed reaction, it needs to take out here. And that's what it did. So anything after that, obviously, is not up to us. But because we're struggling so much to continue higher, because you can see there's one attempt here, and now there's another attempt here, right? This is now becoming messy, and I wouldn't be able to generate a bias here because, right, we already know that we are externally bullish, but we are internally bearish, correct? So
yeah,
we are internally bearish, but the bearish continuation failed, right? But from there, right, we now have this POI that you mentioned, and there's preliminary structure breaks there as well. So we are failing to continue bearish, and we are also failing to continue bullish. So I wouldn't have a bias here.
Okay. I was somehow confused at first because
Yeah. If you're confused, bro, it's usually for a reason. And if you're confused, it's not really the best idea to try to take a position. I would more so rather wait and understand what is going on until you have like a clear model in place.
yeah.
But yeah,
Initially, I was waiting for the last eye to be taken out, so it to signify to me that now price is bullish. But it reacted on that POI, and now, like you said, took the primary support, and now somehow I'm trying to. For me now, I think we should be bearish, but I need to see something play out, like taking the last low. The last low. If price taking that, then I can.
Because what is the external picture over here?
Is bearish. Yeah, that's
bearish.
Yeah.
So that means that this bullish move doesn't mean that you're bullish. This means that this bullish move is a pullback, which means you should have never been bullish to begin with.
That. I want to send a screenshot to you. Sorry.
Yeah, well, okay. So the position is bullish, but the swing is bearish. Right? So in my opinion, I would be playing based on high, right, into low. And then this is the first time we see a decent pullback. So I would 100% still be bearish. I would have never been bullish to begin with, bro.
Okay.
Because yes, the macro might be very bullish, but it takes a long time for this macro to give you a transition into the upside from, let's say, from the pullback into the bullish move. So the only way I would be bullish here, is if we were to have confirmed this reaction and then we take out the high. Then I would be bullish. But up until then, I would still be bearish. I would still continue the internal legs. Right? If I'm trading intraday. If I'm looking for swing positions, then that's a bit different, right? But in terms of me, what I'm looking for, then it would just be the intraday targets. So I would just follow, right, the major / swing position, the swing direction, sorry. So yeah, I would have never been bullish here to begin with. Makes no sense there.
Yeah, because even at that particular point, price has been struggling to go up.
Yeah.
Yeah.
Yep. Not to mention, you already have the POI supporting you here. So here, it's going to become, so for example, this would have been a decent sell if you're playing based on the POIs that are very deep, right? I'm not saying that's what you should have done, but if you do, then that would have made sense there. But for me, I don't think any positions here would have made sense to me, just based on what I'm looking at. Because now, it does become a bit tricky in terms of right where this goes from here, because I don't think it's simple. It's simply you just wait for a pullback and continue. I don't think it's that simple, because this could probably continue lower, take liquidity, give a pullback, but now it could break structure, and this would be my reason to then be bullish. So because I already missed the bearish move, I don't want to chase it.
Yeah.
So this is where it becomes tricky, and I would just wait for a model to show itself.
I'll just wait.
Exactly.
Thank you so much. Thank you.
Yeah, it's all good. But yeah, bro, I would, it just depends. It just all depends on what you're looking for in terms of the position. Whether you're looking for something you want to hold for a couple of days, or you just want to take it in the session and take your profit in the same session. It really just depends.
Thank you.
Cool. So does anybody have any more questions?
Yeah, just I have like the visual representation of what I was talking about before. So I just sent it to him.
Yeah. The 2 links.
Yeah, the first link like trying to show kind of directional bias from a micro intraday perspective, and the red box zooming in on 1 minute just to explain what I was trying to
so
ask.
externally,
Yeah.
you're bearish.
Yeah.
Sorry.
So sorry.
No, this is not the pullback for the entire range. No, this is only for the internal range here. From the red, that green, that solidifies this high. Right, but the external is still bullish here.
Okay.
So here, this break solidifies this low as the pullback low. So realistically, if you're going to continue higher, it's already been solidified. So once this and this is to break, then my invalidation for the opposing direction is now here, which is your purple.
Yeah, yes.
And so here, true sign of bearishness, correct. And this is correct. And this is correct as well.
Okay. All right.
Cool.
All right, thank you. Like that just answered my question because I always thought this was like a preliminary break for not, I didn't realize it was just this until this week.
Which one are you talking about?
But like the green line, I always thought the green line was the preliminary break. When I hear people say you talk about preliminary break, so I always thought it was this, but I then realized like it was the entire solidified points. That was kind of like the
like I
preliminary
said,
break.
preliminary structure break signifies the pullback.
Pullback, yeah.
Yeah.
All right. Thank you. I understand better now.
But yeah, but also mind you, bro, you are an M1.
Okay.
Mind you are an
M1.
Yeah. You know what I mean? So
yes, I understand.
Are the rules going to be perfect in M1? No, of course not. They're not meant to be. So focus on the externals, and if you want to detail into M1, cool, but just understand that that's a risk in and of itself.
All right. True. All right, thank you. That'll be all from me.
Yep. And if anybody else wants to chime in on that, the reason why I'm pushing you guys away, like this is why I've always done this, is that, hey, do not focus on the M1, the M2, the M3, because in my opinion, if you come in to learn this type of style and that's solely what you want to do is only trade based on M1 and trying to just catch every single move or trying to catch the perfect RR, I think the expectations that you're showing yourself are completely unreasonable, right? Because I don't think it's realistic for you to believe that you're just going to come in maybe in a couple of weeks or months. You're just going to be able to instantly grasp onto this and become successful. I don't think that's realistic, right? So if that is what you're expecting and then you don't get it, then it's going to ruin the psychology for you, So that's kind of why I say stay away from the M1, understand your style, learn your models, right? Focus on the intraday, learn to win a trade, and then begin the refinements, right? So step one is always winning a trade, because you cannot do anything if you cannot win a trade. So yeah, that's pretty much it for me for today, guys, unless anybody has any final questions, concerns. Cool. But yeah, guys, feel free to send me journals. Other than that, I'll see you guys in 2 weeks.